All right, so welcome to the next lesson. In the first one, we talked about the difference between scaling and growth and why it's very important to understand the difference, to think through, because growth, just for the sake of it, has a lot of drawbacks. And we then discussed the advantages of scaling and so on and so forth. In this lesson, we're looking at identifying the right time to scale because it's very critical. If you miss time, your scaling process, your growth process, you're gonna be in trouble. Okay, so in this video, we'll explore the process of identifying the right time to scale your business. We will discuss factors to consider, such as a customer base and market demand, and the implications of scaling too soon or too late. Let's get started. All right, customer base and market demand. One of the primary factors to consider when deciding if it's the right time to scale is your customer base and market demand. Now, to determine if your business is ready to scale, ask yourself the following questions. Is there a consistent and growing demand for your product or service? Now, consistent could be misleading here because we're talking about scaling, right? Any kind of a consistent kind of growing demand is good. If you were selling 10 products a month last month and you sold 11 this month, that is fantastic. 11 next month is also good. 3 months down the line, you're selling 12. It's just 2 more than 3 months before. That is still fantastic. As long as it's not negative, it's a consistent growing demand. But is that enough to warrant scaling? No. Are you consistently acquiring new customers and retaining existing ones? Again, 2 components. A lot of people only look at the first component, which is acquiring new customers. But because they're so busy acquiring new customers, they throw everything into acquiring new customers. And the new demand, the surge, leads to lots of issues within the business, right? So that then has a cascading effect and you have bottlenecks, and then ultimately customers are unhappy and they will leave your business. A lot of people, especially, and I'm a startup funding advisor, and I help startups and businesses get in front of angel investors, VCs, and family offices. And one of the biggest things that when I look at a pitch deck initially before I work with them is I see if they're already in business, their emphasis on the growth and how they're acquiring new customers, which is good, but they never talk about the churn rate, right? Are customers leaving? So that's very, very critical. And you need to ask yourself this question. Is there a sizable market for your product or service that can support expansion? Let's say that yours is a niche market, and you've reached the kind of maturity of that market. Then expansion would only lead to diminishing returns. Because when you're starting out expanding, when you're starting out scaling, if let's say your market supports, 1,000 products to be sold, and you've started selling, you sold 10, 15, 20, 50, and you started scaling, okay, you still have 900 more before it reaches the peak, and then from there it's going to be diminishing returns. But let's say your market supports only 500, then you got to look at, or 250. Then you got to say, well, can I expand? Yes, but what am I putting in to make that expansion happen, right? It's all relative. You need to figure that out. If you can confidently answer yes to these questions, it might be the right time to consider scaling your business. Okay, what about financial and operational stability? It's a very crucial factor in determining the right time to scale your business is financial and operational scalability. So before scaling, ensure that you have a stable cash flow and sufficient financial resources to support expansion. What that means is not revenue, right? Look, let's say you're getting 100 customers a month and your revenue is $10,000, right? Fine. But let's say your profit margins are only 10%. So at the end of the month, after all the expenses, I'm simplifying this, right? After you pay off all the bills, you pay off your vendors or your team members, whatever it is, you're left with what? $100 in $1,000 in your hand. Now that cash flow, you got to determine, is this enough to help me scale? Of course, if you get additional funding from third parties, that's fine. If someone invests in your company but raising a debt, for example, that's again dangerous because you don't have a stable cash flow. And if you're making 1,000 in profit every month, yeah, okay. Then after 7, 8, you're reaching the 10th month, you have reserves, you have savings, blah, blah, then yes. Okay. Operational processes in place that can handle increased demand. We spoke in the first video about this, right? You need operational processes that have been figured out before you start scaling. Can they handle the increased demand? A reliable and adaptable team that can manage growth. Again, we spoke about this in the previous episode, and you need a reliable and adaptable team that can manage growth. Scaling without financial and operational stability may lead to challenges that could hinder your business's growth. All right? Okay, let's look at scaling too soon. Scaling your business too soon can have several negative consequences, including strained resources and burnout among team members. So let's say it's you, a co-founder, you got a couple of team members, you're happily servicing 100 customers a month, and then suddenly you find an opportunity where you can scale. There's a campaign you run, and then suddenly you're having to service 300 customers. Now, of course, you could say, well, I'll go and hire more team members. It's not that easy, is it? You know from experience. If you're already in business, you know how hard it is to hire team members that are beneficial to the company. Yes, you can just go and hire anyone, right? That's not what I'm saying. I'm talking about the strategic benefit of hiring them and the effect it has on cash flow, on profitability, so on and so forth. It could lead to team member burnout if you're just trying to make do with the current team, and instead of servicing 100, you're servicing now 300. Compromised product or service quality. Obviously, the moment you start scaling, if you don't have a robust framework to support the scaling, the growth, you're going to compromise on product or service quality, right? Okay, if their product is already made, it's just sitting in the warehouse, and yeah, the quality of the product itself may not be affected, but service quality would be affected, right? Delayed shipments, delayed, whatever, lost, misplaced, difficulty meeting customer expectations and maintaining customer satisfaction, which I think is a holy grail. It is more important than business growth. It's more important than hiring people. It's more important than revenues. It's more important than anything in your business. Meeting customer expectations and maintaining customer satisfaction. You know how hard it is to maintain customer satisfaction during normal times? Imagine during growth. Okay. Financial strain due to increased expenses and potential cash flow problems. Again, same thing. It is essential to thoroughly assess your business readiness before embarking on the scaling process. Okay, let's look at the other side of the coin. Scaling too late. On the other hand, waiting too long to scale can also have its drawbacks, such as missed opportunities for growth and increased market share. So if you're like dilly-dallying and you're like, should we not? Yeah, you could miss out on certain opportunities, right? So there could be a new trend that you know you have to get on, but you're scared. We will address that. If with the right framework and with mastery of this course, you're going to be a professional at doing this, at scaling. Competition overtaking your business in the market. So if your competition makes a move and they're starting to scale, yeah, they're going to leave you in the dust. Stagnant growth and decreased motivation among team members. So if you're just continuing to service only 100, it's your comfort zone, it's your comfort bubble, and you're not taking any proactive measures to create a situation where you're ready for scaling and you're not scaling, then yeah, this stagnant kind of growth and decreased, your team members are going to be demotivated. Striking the right balance between scaling too soon and too late is crucial for long-term success. And that is what this whole course is about. And that is where my expertise comes in. Okay, for this video, there is no worksheet or a framework, but there is an activity because this is about doing. Identifying the right time to scale is about doing. And this activity is called Scaling Milestones Discussion, right? So it's a group discussion activity where participants share their experiences and insights on the right time to scale, including milestones, indicators, and challenges. Who? You and your team members. You might say, Ash, what if it's just me? I'm a solo entrepreneur. That's fine. You got to do this. You got to discuss with yourself or find a mentor, find an advisor, pay one if you have to. This is critical. This is not expense. This is an investment. I keep saying this. The objective of this activity is to help you learn, of course, from each other's experience, gain new perspectives on scaling, and identify common milestones and challenges to inform your scaling decisions. But if you're just by yourself, then yes, I say you need to build a support structure around yourself, even if you're a solo kind of preneur, right? If you're a solopreneur, that means have connections with peers, other entrepreneurs, other startup founders. And by the way, our platform, Panaton, that's where you have this. You have something called as connections, where we enable you to hook up, to link, to connect with other similar entrepreneurs and founders who are doing exactly what you're doing, scaling. Panaton platform is all about scaling. It is it's a tool for helping you scale. And then when you have connections, you reach out to them and then you can talk about it. You can say, listen, are you kind of scaling? And if you are, what is your thoughts? What are your experiences? And you might think, well, you know what? Why would people share this with me, right? Well, the new way of growing, scaling, successful is sharing. If you hold back, if you think you're going to hold back on knowledge that you have, trust me, that knowledge is already out there. There's nothing unique or new about the knowledge you may be holding. Okay, you may think, if I share this with another founder or an entrepreneur, so that's what we're trying to encourage in the Panatron platform. And give it a try. You'll see what I mean. Okay, so divide the participant into small groups of 4 to 5 people. So if you have a peer network, invite them to a Zoom call and say, listen, let's all benefit from this. Let's all figure out what scaling really means. And even if they're from different sectors, in fact, the different sectors they come from will give you different perspectives. Provide each group with a list of discussion prompts. So what are the milestones? What challenges did you face? All these. This is in the activity document. You can download the PDF and you can follow these instructions. I'm not going to go into the entire activity because you can read up on it. All right. So in this video, we discussed factors to consider when determining the right time to scale your business, as well as the potential consequences of scaling too soon or too late. In the next chapter, we will delve into assessing your business's scalability potential to ensure a successful scaling process. So in this, we were looking at, is it the right time to scale? In the next one, we'll be assessing, do we have the potential to scale? All right, so till the next video, just go through that activity, download it, and if you have any questions, leave them below. Leave them, and I will try and answer them for you. All right, see you in the next video.